Aloha and welcome. This is the Trade Journal video series, and I'm your host, Digital Micro Trader. This is November 4th, right after the close. Journey from blowout to fortune. As always, the disclaimer, this video is not trading or investing advice. Never. Information, education, and possibly entertainment, but it's always going to be Digital Micro Trading's personal opinions, and I'm sharing this publicly as my Trade Journal video series. So just know that future stocks, bonds, trading of any kind involves substantial risk. You can lose everything, and I've had that experience, and I sure wouldn't wish that on anybody. I've blown out accounts, learned the hard way. Before trading or investing, do your own due diligence. So again, you're responsible for making your own investment decisions. It's your money, and you're the money boss, nobody else. I'd like to talk about one key thing as I build back my account from blowout to fortune. The number one game changer element to trading success, proper capitalization. A large majority of traders expect so much when they have undercapitalized accounts, and many people just don't realize this is something I wish FinTwit and other YouTuber traders that are trading with millions or several $100,000 worth of trading accounts don't more aptly explain in their videos that it takes time to properly capitalize, where you're going from a side hustle to really having something viable that will change your life. This is the number one thing of what creates a blowout situation. I've blown out from a large account, and once you get down to a certain level and you've lost the money, then it becomes real hard to try to get that back because your capitalization's gone. Okay, we have the 120 minute. This is very important because the 120 for me is purely an intraday trading location chart. This is my reference for, and let's look at how she closed on Thursday. All-time high on this last candle here. I would not want to fade this because what it looks to me as a total flag here. So from the close of yesterday on the 3rd, you've got your Globex, no down, all the way drifting up on Thursday, and then we closed at an all-time high. No reason that we couldn't close upper Bollinger Band tomorrow, Friday, so I would not be fading this. So that is very telling here on the 120. This rally is far from over. Take a look at the RSI. Now, this is for reading. It's a lagging indicator, and I don't trade off it, but I'm just referencing for RSI. Okay, scratch that. Cut. This RSI is over 70 now for several bars. Again, take a look at this main bar here with the Fed day, FOMC day, happening. We had this large bar up, and then we're flagging up. So I do expect next week that we're going to go below, but I'm not expecting anything to go down on a Friday. Maybe a bit, but not trading the S&P micro, staying away. This brings us to the Russell 2000 micro 2-hour location chart. I like this a lot better for a mean reversion opportunity, and let's break down why. So the upper Bollinger, you can see how the wick here of this candle hit again an all-time high, but look how we closed here. We did not close like the S&P 500 at the all-time high. We absolutely did not, and so we're very close to an upper trend mid Bollinger Band zone. So I'm not looking for a real big target here down on the downside, but I am thinking 88, 92 zone. So I'm light. I've got 50% dry powder. If we do tag this now no longer uptrending upper Bollinger Band, if we did hit the upper Bollinger Band, I might do a little add-on to my multi-day trade mean reversion. But at this point, let's look at the relative strength here. We've got a double topping high above the 70. So that's another reason I like this setup, particularly if we did tomorrow and Monday go up in the Globex section of Monday and go above 70. That would be another indicator for me to hit it again. So I've just been basically, one thing I like about the Russell is it's been very vertical this week, and that's why I did not have a great week. But I'll tell you what, when it does have a mean reversion, it's a lot quicker to go down than the S&P micro. So in my opinion, for me, I'm going to get some of that money back next week, and I've got some dry powder to do that. This is the chart of the day for me. This is a 30-second trigger chart I use, and I watch it religiously every day. And again, the instrument here I'm looking at is the M2K micro. That's the Russell 2000 30-second. So let's look at this and break it down. On November 4th, regular trading hour, opening range, first 30 seconds, we've established in the yellow horizontal. Look at this. Traders took it up, and by the first initial balance, we were way above it. Not way above, but we were above for sure, hitting new highs. And then you see a decline right before the lunch hour, New York time, about probably, I'd say, an hour. We go back, revisit the open range, and break through it. So very bearish once you go down and you can't recover above that opening range. It never happened again. So that, to me, what I like about this setup here is we did not close bullish after a giant, massive Fed day gap up that just did over 4%. This does not look like this is going to be a huge bullish up. So I've got some stops if we do go above this, but I am not adding to my position, as I mentioned in the earlier chart that we looked at on the 120-minute. I want to add if it were to go above, but right now I'm just going to hold my position. I'm looking for a break possibly below the pivot right now, which is 2390, key area of support if bears want to get any mean reversion. So again, this was my key chart for the today, and take a look at that and study that a bit for reference. Take care. So to finish up today's broadcast, I want to close with the Bitcoin 24-hour. The first thing that should jump out at looking at this chart is the Bollinger Bands are in a tweezer mode, very compressed right here, upper to lower. The blue dot here is our anchored VWAP, and that's from October 1st. So we've really gained some ground. So this is not really correlating to the equity market. We are basing here this red line at about 60,653. That's $60,000, $653. That's the support zone, and it's just under the middle Bollinger Band. What are my thoughts here? I am not, this is representing 48, 49% of my digital micro trading fund, and I am not doing anything on day trading or even multi-day trading. This is a hodl position for me for the next several weeks, and I am looking to revisit my allocation overall for the portfolio by first month of the new year, but I am looking for higher prices. I do not see this as bearish. what I do is analyze this as a rest and a pause with these wicks here and a consolidation of Bollinger Bands. I think easily once we go above 70,000, if we can hit that in the next 2 weeks, 3 weeks, we have a fair shot of getting 80, 90,000, no problem by mid-December. This is a bright star of the portfolio, and I keep wanting to, you could never get too many Satoshis, right? So just want to stack up and do a dollar cost average in when I can, and that's what I'm doing to build this fund up for 2022. Take care. Aloha. Please hit the subscribe and smash. I really appreciate it. Take care. Aloha.